How's it going, ladies and gentlemen? I'm finally back. So recently there were a lot of things happening in the stock market, so there were a lot of technical stocks that are dropping rapidly. Hopefully you are still feeling good and your stock portfolio is also good. Before we get started, just a very brief advertisement from my personal website. Recently I created another website called nianinvest.com. So basically I posted all my past holdings and also past return histories and also trading histories to you. I created this website because a lot of my friends, they're asking me like what's my past returns and what are my trading history, so they want to follow me. I think as a software engineer, I want to show off some of my skills, and also this is, I believe, in my opinion, the most convenient way to display the histories and all those data to you. So all the data in this website is genuine. Basically, I started trading back in October 2018. It's around 2.5 years right now, and hopefully this website can always do to record all my personal data. And probably after 50 or 70 years old, I might be a fund manager just based on this website to show my insights. Who knows? So yeah, hopefully this website can bring you more information. Alright, so today I'm going to talk big three categories. So the first category is about the macro trends. For example, one point I would like to talk about is what's happening in the sectors. And second is about the 10-year Treasury bills, which I already mentioned in my last video, but here I would like to talk more. These two parts were already talked by many fund managers, such as Cathy Wood. However, for me, I would like to illustrate more in a more easy understand language to you, so hopefully this can bring more insights. While for the second category is about some strategy, and that is why you should not sell off your stocks or portfolio right now, and also give you some advice on it. And last category is two of my most bullish stocks. So if you want to know what are they and why they're so significantly undervalued right now, so just keep in mind to follow this video until the end. Alright, let's get started. The first part is sectors. There are actually a lot of sectors. For example, energy, oil, airline, EV, financial, etc. So you can actually list it as many sectors as you want if you want to make them as granular as possible. So here, broadly, in my opinion, there are actually two different sectors. The first is the value sector, and second is the tech sector. I know there are definitely some overlapping parts. So for example, a certain company might belong to both sectors at one time. However, I'm just talking in very general here. So usually the money is shifting between these two sectors. When the market is good, more money will be go into the tech sectors. While if the market is not good, then it will go back to the value sector. So here's the reason. If the market is good, people are really optimistic to the growth of the future. As we know, for the tech companies, usually the growth rate is really high, and therefore, if the investors put a very high anticipation to the growth, to the future, they will have a very high stock price right now. On the other hand, if the stock market is not good, so this kind of growth rate will decrease, and therefore the value will be decreased as well. People will focus more on, for example, the book value or the PS ratio. People know, like, even though the market is not good, people are not willing to purchase a lot of the services and products. However, for a company, if its intrinsic value or the internal value is still there, people are still feeling better or more comfortable to put their money into those companies. So this is the pure explanation on the money shifting between these two sectors. So here's the thing, recently a lot of tech companies, their market cap actually dropped a lot. I know a lot of you are feeling very sad. Oh, why I just lost so much money in this company, right? That is okay. If a lot of money actually popping into one sector, for example the tech sector, that is somehow like the prediction of the bubble. If you remember in 2000, basically I was just an infant at that time, but if you look back in 2000s, basically a lot of money were actually pumping in the triple-W company. As long as a company is related to internet, money or funds will actually go into that company. So that is not a good sign, since at that time the valuation of a company is definitely beyond its intrinsic value. So that is not good. And therefore, for those kind of crazily increasing stock market, you will definitely have a very rapid crash. However, recently, we just can't say it's a crash. It's a very healthy interaction between the different sectors. So this is a good sign basically. If the stock market, especially for those tech stocks, if their stock prices keep rising, that will make me even more worried than just getting dropped a little bit, at least in short term. So here's the thing about the sector. So you don't have to worry too much about it. The second part is about the 10-year Treasury bill. So in my last video, I've already talked about it, and basically after I talked that, the market just keep crashing all the time. Here's a very good explanation. If the 10-year Treasury bill interest rate is increasing, basically the depreciated value for enterprise right now is definitely decreasing, and that makes sense, like why the stock price is dropping. So that makes sense. However, the truth is, just like what Cathy Wood said, when you are calculating the depreciated value, when you are using, for example, DCF model to calculate the intrinsic value for the company right now, basically you just don't use 1.6% of this value. For me, I would usually use 7 or 8% as the depreciated value. The 10-year Treasury bill right now, the interest rate is just 1.6% as of yesterday. However, that is not high actually, compared to 6 or 7%. Therefore, when you are calculating the DCF model, you will still put 8%, right? You just want add another, for example, 1 or 2% on that kind of DCF model, just purely because the 10-year interest rate is increasing. That just doesn't make sense. So there is actually nothing to worry about the increase of 10-year Treasury bill increase. The fact is, it's really hard for the 10-year Treasury bill to increase over 2%. If you see for the last decades, it's really hard. If the yield is over 10%, that is definitely a very tragic thing for the entire stock market, since in history there was a time basically the interest rate was over 20%. So at that time the inflation is really crazy, and the government and also banks have to do this in order to keep the inflation rate a little bit lower. But I don't think that's what's happening nowadays, since the technology is changing our world basically, and a lot of production increasingly is not just linearly but exponentially. So this kind of increase of production can actually increase the value created to the society and this world dramatically. Therefore, you just can't basically anticipate the inflation rate by purely based on how many money were printed. You have to see what are the true value created to the society at the meantime. The third part is about just don't sell off, alright? I know a lot of people are really panic, and some of them in my group are actually selling off. Oh, by the way, so if you're interested, I got a WeChat group here, so it's totally free. If you understand Mandarin, feel free to join. There are a lot of big, very talented people in this group, so we are always sharing our ideas and to encourage with each others. It's quite beneficial in my opinion. It's also free. Alright, let's back to the topic. So I know a lot of people in my group that are really afraid, so I'm always saying you don't have to sell off your stocks. Sell off doesn't mean like you shouldn't sell any of the stock. In fact, if your cash portion is really low, you have to sell some of the stocks. Also, if you're on leverage, basically I'm always telling my group mates like just don't put any leverage. If you have leverage, you definitely should just decrease or even cancel this kind of leverage, since the market crash can definitely kill you if you have the leverage on your stock portfolio. The reason here why you should not sell off your stocks means you should not sell all of your stocks or sell most of the stocks, since it is just impossible. It's not even hard, but just impossible to predict when the stock price will increase or decrease. For instance, if you sell off your stocks right now and take around 20 to 30% loss of your portfolio, how can you know whether in the next week the stock will just bounce back and you will miss, for example, the next 50 to even 100% of growth in the next year? In analogy, if you sell off your stocks, it's more like you give up your short-term loss and to avoid a long-term growth. So the reason why I'm always believing the stock just won't stay all there like for 10 years, just like after the tech bubbles in 2000s, is more because the technology nowadays is more mature and it's very different from the old days basically. The production is very accelerated in a very high rate, and I believe this can definitely change the world. And the correction is just short term. It won't last for long. Last but not least, I would like to talk about two bullish stocks in my portfolio. The first one is Tesla. As we know, Tesla recently just dropped very much, and I'm always encouraging my group mates, just trust in Tesla, just trust in it. So here's the thing, when back to like 2 years ago, at that time Tesla just don't have many production basically. So at that time a lot of people are really bearish on this stock, and they just think that okay, the thing just won't happen since the demand issue is there and the delivery issue is also there, and they just don't trust in this company. However, back in 3 years ago, I trusted in Tesla and invested a lot of money in it. The reason is I really understand Elon Musk, this person. I read all his biology and I really find a lot of similarities between him and me. So sometimes I would just think in my perspective like what I would do if I'm the CEO of Tesla, and I can somehow predict like what he will do next. So here's the thing. In Chinese it is called 英雄所见略同. In English it's called if you are both heroes, then basically you know each other what you're going to do next. When he first founded SpaceX, at that time he's really not sure whether the rockets can launch successfully. However, the truth is after 3 failures, they succeeded at the 4th time. So that is at the condition that he is really uncertain about the technology or his belief. However, right now, just as Cathy Wu said, no fans, no institutions is taking price of the fully autonomous driving those market share into Tesla's stock price today. So here's the thing, Elon Musk is super confident about the level 5 FSD, and he just believes this can definitely happen. And here leads to the comparison. When Elon Musk first founded SpaceX, and he's really uncertain about the technology, however, he still succeeded. And here is another scenario where Elon Musk is super confident about the technology. So what do you think the result would be? It would definitely be successful, right? And second stock is Palantir. So just last Sunday, actually, Palantir released its cooperation with Amazon AWS to release their ERP cooperation with AWS service. So here's the thing, if you have this kind of service, this is kind of a very first step to get in touch with the customer base. So previously we know the Palantir is more about the 2B business, but right now they're taking the 2C business. And I believe big data can definitely change the world. So this is another reason why I fully believe in this company. And third is, of course, its CEO. So Palantir's CEO was previously working with Elon Musk and founded PayPal, and that is also a very successful entrepreneur story. So I truly believe in this person's vision, since once he said, if you're interested in the short-term profit, just don't purchase the Palantir stock. So he's the person that really focuses in the long term, and therefore I'm really happy to keep my money into some person that have a really long vision and can maximize my profit in the long term. Alright, so hopefully this video just answers some of the concerns and doubts. So if you have any questions or comments, please feel free to leave them in the comments below. If you have any other interesting topics, also to let me know so I can make an individual video for you. Hopefully we can overcome this really tough scenario, especially for the stock crashing, and hopefully you can find a lot of great opportunities and to make the best decisions. Thanks for watching. See you next time.